A beginner's guide to investing in the stock market. Investing in the stock market can be an exciting yet daunting endeavor for beginners. The potential for wealth accumulation and financial independence attracts many, but the complexities of the market can often lead to confusion. Understanding the basic principles of stock market investing is essential for making informed decisions and developing a successful investment strategy. This comprehensive guide aims to provide beginners with a clear roadmap for entering the stock market, empowering them to make educated investment choices that can lead to long-term financial success. Before we begin, make sure to smash that like button and hit the subscribe for more exciting content. Get. Understand the stock market. The stock market is a platform where investors buy and sell shares of publicly traded companies. A share signifies ownership in a company, and investing in stocks means purchasing a piece of that company. Share values fluctuate due to factors like company performance, market trends, and economic conditions. Understanding key concepts such as stocks, bonds, mutual funds, and ETFs is essential. Familiarizing yourself with terminology like bull markets, bear markets, and volatility will enhance your market navigation. Set clear financial goals. Before entering the stock market, it's essential to define your financial goals. Are you investing for long-term growth, retirement, or a short-term objective? Clear, measurable goals will guide your investment strategy and determine your risk tolerance. For instance, saving for retirement in 30 years may warrant a more aggressive approach than saving for a house down payment in a few years. Understanding your time horizon and financial needs will help you select the right mix of stocks, bonds, and other assets. Understanding your time horizon and financial needs will help you select the right mix of stocks, bonds, and other assets. By aligning your investment choices with your goals, you can create a more focused and effective plan for achieving financial success. 3. Create a budget. Establishing a budget for your investments is essential. Determine how much money you can comfortably allocate to investing without compromising your essential expenses and financial responsibilities. It's advisable to start with a modest investment and gradually increase your contributions as you gain confidence and experience. Consider factors such as emergency savings and debt repayment before committing significant funds to the stock market. A good rule of thumb is to invest only what you can afford to lose, as the stock market carries inherent risks. 4. Choose an investment strategy. Some common strategies include long-term investing. This strategy involves buying and holding stocks for an extended period, aiming for growth over time. Long-term investors typically ride out market fluctuations, believing that the market will recover and their investments will appreciate. Value investing. This approach focuses on identifying undervalued stocks with strong fundamentals, seeking to invest in companies that are trading for less than their intrinsic value. Value investors look for companies with solid financial health and growth potential. Growth investing. Investors following this strategy look for companies with high growth potential, even if their current valuation appears high. Growth investing often involves higher risk, but can yield significant rewards if the company succeeds. Index fund investing. Investing in index funds or ETFs that track a specific market index provides diversification and reduces individual stock risk. This passive investment strategy appeals to many beginners due to its simplicity and lower fees. 5. Research and analyze stocks. Before making any investment, conduct thorough research and analysis of potential stocks. Evaluate the company's financial health by examining key metrics such as revenue, profit margins, earnings growth, and debt levels. Familiarize yourself with the company's business model, competitive advantages, and market positioning. Reviewing industry trends and market conditions that may impact the company's performance is also crucial. Utilize resources such as financial news, company reports, and stock analysis tools to gather relevant information. Additionally, consider using fundamental analysis and technical analysis to inform your decisions. 6. Open a brokerage account to buy and sell stocks. You'll need to open a brokerage account. Research different brokerage platforms to find one that meets your needs, considering factors such as fees, user interface, customer service, and available investment options. Many brokerage firms offer user-friendly platforms specifically designed for beginners, providing educational resources and tools to assist you in your investment journey. When selecting a brokerage, consider whether you prefer a traditional broker who provides personalized advice or a discount broker with lower fees. Once your account is set up, you can fund it and start investing. 7. Diversify your portfolio. Diversification is a critical principle in investing, as it helps reduce risk by spreading investments across various asset classes and sectors. Instead of putting all your money into one stock, consider building a diversified portfolio that includes a mix of stocks, bonds, and other investment vehicles. This strategy helps mitigate the impact of poor-performing investments, as gains in other areas can offset losses. Aim for a balanced portfolio that aligns with your risk tolerance and investment goals. Diversification can also involve investing in different industries and geographical locations, further reducing risk. 8. Stay informed and monitor your investments. The stock market is dynamic, and staying informed about market trends, economic indicators, and company news is essential for making informed decisions. Regularly monitor your investments and assess their performance against your goals. Consider setting up alerts for significant price changes or news related to your holdings. Staying engaged with your investments will allow you to make timely adjustments to your portfolio when necessary. However, avoid making impulsive decisions based on short-term market fluctuations. Instead, focus on the long-term potential of your investments. 9. Be patient and avoid emotional decisions. Investing in the stock market requires patience and a long-term perspective. Market fluctuations are inevitable, and it's essential to avoid making impulsive decisions based on short-term price movements or emotional reactions. Stick to your investment strategy and remember your financial goals. If the market experiences a downturn, focus on the fundamentals of your investments rather than panic selling. Maintaining a disciplined approach is crucial for achieving long-term success. Emotions like fear and greed can lead to poor decision-making, so developing a rational, data-driven investment mindset is vital. 10. Educate yourself continuously. Investing is a lifelong learning process. Continuously educate yourself about investing strategies, market trends, and economic factors that influence the stock market. Read books, follow financial news, and consider taking online courses to deepen your understanding. Engaging with investment communities, forums, and social media can also provide valuable insights and perspectives. The more knowledgeable you become, the more confident you will be in your investment decisions. Additionally, seek advice from experienced investors or financial advisors, especially when making significant investment choices. In conclusion, investing in the stock market presents exciting opportunities for beginners to grow wealth and achieve financial goals. By grasping the basics, setting clear objectives, conducting thorough research, and maintaining discipline, novice investors can navigate the market confidently. Remember, investing is a journey requiring continuous learning and adaptation. With patience, education, and a well-thought-out strategy, you can unlock the stock market's potential and work toward realizing your financial dreams. If you find our videos helpful, don't forget to share, subscribe, and hit the like button to support our channel.